No matter which markets we're looking at, Bitcoin, S&P, or the real estate market, it always seems like they're looming towards some sort of fearful news, some sort of collapse. But in reality, looking at the data, this typically doesn't happen. Just looking at the data here, and that's what we want to look at in today's video. Moving forward, getting through the old red September, which in fact hasn't been all that bad for Bitcoin and the stock markets, and just having a look forward to what the data tells us about October, moving forward 6 months from October and 12 months from October as well. Make sure you hit that like and subscribe. You know what you need to do to help out that YouTube algorithm, or at least my channel in the YouTube algorithm. And let me know in the comments section down below. I'll leave a question there, the pinned comment there. What do you think is going to happen to October? Is it going to be red or green? It helps out the algorithm too. Anyway, let's dive into it. This is your home of macro cycle analysis. We study the past to forecast the future, and thanks to your reminders, everything's been going relatively well, or as expected, especially for our part-time traders and investors, and some of them are even full-time, just snagging a few more scores here, a few more profits on their crypto trade. So link for that's in the top of the video description. Enough of the shills. Let's have a look at what's going on in the market and get into the analysis and online influencer analysis, which we actually have been doing pretty well on that front. Okay, so looking at October, markets typically bottom 50% of the time, which is a pretty phenomenal statistic. Looking back in history since 1950, markets, like we talked about last year, we were looking for a bottom in 2022 around October. June, October, March are typically good times for lows. And in this case, because of how things were lining up in the timing for 2022, we had a good low come into the market. And that was basically the cycle bottom. And I know there's still a lot of people out there still looking for further lows, and for the S&P to break down from 3,500 points. It's currently sitting at 4,300 points. When most were expecting recessions and big collapses, the market did the opposite, which typically suggests that was the max pain. The max pain was to the upside because the majority were expecting further downside. So it caught out the shorts and people who weren't invested and forced them to get in at higher prices, which then we had a typical seasonal correction through August and September, which basically fooled those who were getting in too late. But just going back to the data for October, maybe we see a low in the market, and we're not too far off the low at the moment when it comes to the S&P. And I want to drag this into the Bitcoin analysis as well. This is looking at everything. We're piecing it all together here from the real estate cycle, which is the biggest that we need to follow, then to the stock markets, then to Bitcoin. So going down those ladders of where the most money is sitting. So we've got this in mind. We followed that. Look, you can see March here also has some pretty high chances of lows in the market, but this is looking specifically at bear market bottoms, and basically we've got another one there, so add that to the list, bringing it up to 7 now. But there's also good opportunity for lows in March and October and June as well. But anyway, to the real estate cycle, we move on from this point. We're currently sitting in this section. So I'm just coming back to remind us about the real estate cycle, because it's such a long cycle that it's pretty easy to forget where we currently sit. And we're basically in this section here. Commodities boom, huge infrastructure spending. It doesn't necessarily look like that from the outside, but remember, this takes years, and you can see a lot of it going on. There's even, if we remember back to June, the debt ceiling, and now we've got the US potential shutdown in 12 hours, 24 hours, whatever it is. Basically, the debt ceiling, they can spend as much as they want, which in fact, if it's not about money printing, then the debt ceiling's not there. There's still a way for them to push money into the system, and we're starting to see that as well. So we're getting closer to this time frame of 2025, 2026 for a peak out in land prices. Remember that, we're not looking at a stock market peak here, but mostly for land. Stock markets could go on a little bit further from there, maybe 12 more months. Maybe it goes for a peak in 2027. And that would line up 20 years from the 2007 peak, and the land prices peaked in 2006. Anyway, we've got a long way off from that point, and a lot more excitement to come. Era of very easy money is ahead of us, and I know that triggers some people. They tend to click off. If that's you and you've come back to the channel, I've seen a few of those, let me know in the comments as well. So basically, we're in this section here, and we're climbing our way up. Property prices have also started to shoot up in the last 6 months. I've been covering that on Twitter. This one's an interesting one here as well. Housing market stats that might surprise you. Now it's almost cheaper to buy a new house than an existing one. A new house over existing. This is going to fuel this even further. If new houses are cheaper to buy, and you can see the trend is up there, which is the new houses here yellow and the resales are blue, and they're getting closer to the mark, that might trigger more buyers to be buying new, which then triggers the home builders to continually increasing their profits during this period, just like they have done since the June bottom. So June 2022, they had a higher low in October and then another low in March. Remember this, how it's all coming together? You got lows in the market. This was the bear market low, but statistically, there's a possibility of getting a higher chance of getting a low in March. And you've also got these other months that have also had one bear market low, and June is one of those as well. So with all of this in mind, with home builders increasing their profits, it seems like the whole cycle is still on the way up. This is what we've been covering for years now on the channel. You know what to do if you want to keep abreast of all of this stuff. And one might say, well, this is a double top coming up. Sure, but typically what we've seen, especially in these rising markets, as the cycle continues up, they will eventually break through the double tops. And TIA Crypto members know what this is all about. 1, 2, 3. What happens on the fourth time? Huge breakouts typically happen. Does that mean we're going to get 1, 2, 3 tests and then a fourth? We'll wait and see over the coming months. But nonetheless, although there is a double top in play, you can see that happening at the moment. It doesn't necessarily mean this has to collapse from this point. Maybe we get a short pullback and then a break to the upside, which all goes in line with what we're looking at here. So for the S&P as well, we are looking at the October months. There's basically crises at every single low point in the market. You got the October low inflations and all that sort of stuff, the fears of interest rates as well. And the worst news comes out at the lows. Worst news comes out at the lows. Look at the March low that happened this year in 2023. Do you remember what that was? The banking crisis. SVB, Silicon Valley Bank, going down, taking a few other banks with it. Guess what happened from that point? You had 1, 2, 3, 4 months to the upside here. Well, even if you want to include March as a green as well, you had 5 months, 5 green months, 5 months to the upside after the worst crisis that we have ever seen since the global financial crisis, the GFC, when we had Lehman Brothers go down. Remember, Lehman Brothers was supposed to be, well, 2023 March was supposed to be similar to the Lehman Brothers. And no, the market went 5 months to the upside. You don't see 5 months to the upside when it comes to the GFC and Lehman Brothers collapsing through September, October of 2008. So hopefully we're starting to see through all the noise and the news. More upside is expected over this next 3, 6, 12-month period, probably even longer for the SP 500. We're having a reasonable pullback, and like we've seen before, we are potentially going to see more green months. So I want to get into the data now for Bitcoin. This was just to give us a recap of the real estate cycle, what's going on through that area, the SP 500. So first, let's draw our attention to the month of October. Is it a green? Is it a red? Historically, just looking at the last 9, 10 years, you can see most of them are green, and the ones that were red weren't anything too severe. 2014, 13%, that's pretty significant, but for Bitcoin, you know, you can do that in a day or two. As for the year of 2018, which was the bear market year, not a good year at all. So 2014 was a bear market year, and 2018 was the bear market year, and it really wasn't too bad of a year when you consider the whole market where it was at. You were getting red after red after red after red in 2018, and there's 2014, 3 reds, 2 greens, 4 reds, 1 green, and then another couple of reds in a row. So overall, October is typically known as Uptober. You got green months coming up, but I want to know, what is the probability of that happening? And let's have a look at some of the forward returns as well, the 6 and 12 months that I have down here. Now, if you want to get access to this sort of stuff, we're working on getting this across as part of a new dashboard. Subscribers, if you're subscribed to the email list here, which is the top of the video description, all members should get notification of this when it comes out as well. But if you haven't, make sure you do subscribe so you can get access to more of this data as well. I'm going to get to these ones here. This is the really interesting stuff. But essentially, this is the main one that a lot of people are looking at. September potentially is going to be green. Still a few more hours to go, but it's currently sitting at about 3 or 4% above. And it's potentially going to break a 6-year down streak. So 6 years in a row, each September has been red, no matter if it was a bull market, bear market, accumulation market, they've been red. Potentially, we're going to break that. A few more hours to go. And it might even break a 2-month losing streak for this year as well. So we wouldn't, well, let's see. Maybe we don't get a 3 straight months of red like we did during the bear market of 2022. So that's a good thing there. The quarterly returns are also going to close this month in the next several hours. That will more than likely be a red quarter. And 2023 is similar to 2019, similar to 2015 in the fact that we're in that first year out of the bear market low. So basically within that sort of 12 months after the cycle low has come in. Now, if you're still in the belief that we're going to see a new low in the market, just put that aside just for a second so we can take a look at the data and the facts themselves rather than the hope the market's going to crash past 15, 18, 20 grand. Currently sitting at 26, close to 27 grand actually. And we look at the quarters here. Quarter one's been green, quarter two's been green. 2019, you had a green 1 and 2, then you had a red and another red. But remember in 2019, that was a huge pump up. It was a huge pump there, 160%, and we haven't seen anything like that this cycle. We might be a little more similar to the 2015-16 base, where we had that first red, 7%, so pretty modest there, 10% negative, and then we had an 80% up. So it was just a very modest decline there of 3%. Then it started to go on another big streak. So if that is the case, quarter four could potentially be a pretty solid quarter for Bitcoin and might even break that 32K. I'll reserve the right there until we can see some consolidation above 28.5K, but it might be shaping up for a pretty good quarter four, considering how quarter fours have acted in the past and also acted in that, that year coming out of the lows, especially when there hasn't been too big of a decline like there was in 2019. And granted, there's only one data point there, so let's see what happens from that point. But we have seen one red quarter, quarter four. I'm thinking potentially green in this case. So this is what we just looked at here, the possibility of 6 straight years or 3 straight months getting taken out as well. And pretty good comment there. Look, most people are typically wrong, which is what we look at because 90% of traders lose in these markets just following the herd. So let's have a look at some of the dates now, looking at moving forward 6 and 12 months, where we currently sit. If in fact this is a cycle bottom, which is what I'm calling it, we will then be at 11 months from the cycle low come October. So come the next 12 or so hours, we'll be in October, 11 months from the cycle low. In the video this week, where I looked at times running out, insane pre-halving price targets, that takes us to somewhere around that 42K, at least test before the halving. So we have 6 or so months, 6, 7 months before the halving. Potentially we get a test of the 50% level, which is around 42, and then maybe we break above it after the halving. It can happen before, it's gotten very close in the past, but there's been tests of that 50% level in each bear market, okay, or at least coming out of the bear market, that first stage of the bull. So I think we're likely to see a test of 42K within the next 6 or 7 months. That's where we sit for October. To the end of the cycle, somewhere around late 2025. So we've covered that as well, looking at these cycle tops as we count forward roughly 3 years from the low and then 12 months to the next low. Is it going to continue to happen like this? It definitely does not have to happen like that, of course. But eventually we might get a little small bounce in the first half of the 4-year cycle, which would put it into a weak stage of the cycle, and then you get a longer bear market. So maybe we see 12 or 18 months up and then 2.5, 3 years down. Okay, we'll get to that. It's probably several years away, but that's something to definitely keep in mind. So that's what we're looking at here, 50% breakout coming up, cycle bottoms. We're at the 11-month point. Here's what happened the 11-month point in 2015. You were at the breakout and then the reaccumulation before the next breakout and reaccumulation, so on and so forth. We've covered that quite a few times. Let's get on to some of these figures. This is the cool stuff here. 6 months, October to April, 12 months, October to April. What have the forward returns been from this point? Essentially, if you were to buy on October 1st, what are the probabilities of getting a profit or a loss in 6 months' time or in 12 months' time based on the history of BTC? So we have 14 data points here. There's been 14 years here, 2009 to 2023. We're obviously pending a close on this one here, but it's probably likely going to be a green coming into the end of September. Anyway, we have 14 points. For the 6 months returns, there are 1, 2, 3, 4 losses. And for the 12 months, there is 1 loss. September to September, this is what we looked at last month. There was 2 losses here. And so the probabilities were very high that if you were to buy at the beginning of September, in 12 months' time, you would have a profit in your account. The same sort of thing is lining up here for Bitcoin, where we look at if you were to buy at the beginning of October, in 12 months' time, there is a 93% chance that we're looking like we're going to be positive in 12 months from this point. So 1st of October till the 30th of September. I'm not going to include these sorts of gains and average these out because obviously the first couple of years are ridiculous. 8,000%, 8,000%. I don't think that's likely coming forward in the next sort of 12 months. I mean, it'd have to hit hundreds of thousands of dollars. And yes, I do know that that's what some people are predicting. But, you know, you always got to look at it and think, what are the extremes of the top end and the bottom end? And typically the answer is somewhere in the middle. The bottom end, the extremes are like 3,000, 8,000, 15,000, I think is a bit of an extreme there. And the top end is whatever Kathy Wood's talking about, where she's going on about $650,000 Bitcoin, $1 million Bitcoin. Michael Saylor, what's he going on about? Some ridiculous numbers as well. And they would be the extremes at the other end. And it's not that you have to average them out, but put those extremes aside. Let's look a little bit more logically here, just using the data so that we actually make money from the market and not come out the other end like 90% of people who lose money in the market. So that's a pretty good figure there, I think, when we look at October to October next year, which then puts us in that position of the market just starting to break out. So you got the halving around April, and then you could go all the way to the end there. We had some other dates that we're looking at for the extremes there, not for the halving, but in terms of how long it might take for the market to break out, somewhere after quarter 3 or end of quarter 3, quarter 4, something like that, which then also takes us to that September-October period, which could be a pretty significant move up. Maybe we'll be trading somewhere around 40 or 50 grand in the next 12 months. So at around $27,000, a doubling of that's 54. That would put us well and truly up, getting closer to that all-time high, which is similar to previous cycles where that's basically coming towards the end. You've only got about 12 months left before the cycle top. That's typically what's happened here. You've got the breakout October and basically 12 months left until the peak. Same thing happened in 2016-17. So you have the breakout of the 50% level in November. The top was in December, so it was like 13 months, same sort of thing here. So things are sort of lining up for that point. And this is why I like to take a slightly bigger view of the market, because if we look 6 months out, this is probably our best chance of lower prices if we've missed out on the 15K lows or the 20K lows when the masses we're talking about. Remember, this was the banking crisis, as I reminded us back in when we looked at the S&P. These were the banking crisis low and the FTX crisis low, and the market's been at higher lows since that point, even though the fear might have felt like we were at lower points. When you look at the price chart, it's actually higher. So if you missed out on these opportunities because maybe, who knows, you're following that sort of mass media mindset where these professionals think the market is going to collapse, I'm thinking this period here, that quarter 3 of 2023, quarter 4, early quarter 4, might be the next best opportunities for those DCAs. if we've missed out on those points. Now, let's just take a quick look at the downside, because it's not all going to be straight up and roses from here, because we've got a lot of overhead resistance. We still have our 50% level here, the macro level at $23,600, which is the cycle low to the current first range out. So, in the short term, maybe October does push lower, because like we've seen in the past, from the SP 500, that we do get some of these lows here, 50%. Sometimes we get October lows, sometimes we get March lows, which we both had this time around. And maybe the S&P just touches a little bit lower for October and then starts to work its way higher over the course of Q4 and Q1. For Bitcoin, maybe it does have this nice green September, a quick move for October, and then maybe a higher close. That could also be a possibility there. And then let's see if the market can overcome those key levels to the upside. 28,500 is the real big trigger that I'm looking for here for consolidation, so that we can start to test 32K, which is the white line here, and that would then drop the probabilities of further downside moves past 25,000. Now, the last white lines to the upside, we looked at the downside here. The last white lines to the upside are at 50%. That's the 42K level, or 42.2K to be more precise. And then the monthly swing top at 48,200. So they're going to be some pretty significant levels when this market does start to break out of 32K. And of course, throw in 35, throw in 38, and of course the psychological number of $40,000 for good measure. Bull markets don't flip straight away, and of course you've got to wash out all of these sellers who will be selling at 35, 38, 40, 42, 48, and in the 50s. You've got to wash all of those sellers out, and then we start to make quick, easy gains to the upside. But by that time, it's probably too late. You've got about 12 months left. So October, I think it's looking reasonably sweet based on the data. This has been great. Guys, if you want access to that when this is all coming out for a new look dashboard and indicators, definitely subscribe to TI Crypto. Link is in the top of the video description. Otherwise, have a fantastic weekend, and I'll see you back here next week. Till then, peace out.